Welcome to the Rise Network podcast show, a podcast dedicated to help you reach your dream lifestyle through investing in real estate. We're going to be sitting down with new, intermediate, and experienced investors to talk all about real estate and how it has changed their lives. If you're looking to scale your portfolio or even just get into real estate investing, you're in the right place. Make sure to tune in. Hello, everyone. You are listening to the Rise Real Estate Investing Podcast with your host, Austin Ye, and Mayu cannot be with us today. He's taking the day off. He's slacking. No, I'm joking. He's just a little bit sick. So everyone wish Mayu quick recovery until he jumps on the next preamble. But just some quick updates. We're going to keep this preamble short and sweet because I feel like when I'm speaking alone, I don't even know what the hell to talk about. So what have I been up to this week? I'm already losing my mind. A couple of things. So we moved a few wholesale deals last week. It's good because we're seeing buyers slowly coming back. Might be as a result of resumed confidence in the real estate markets, or maybe buyers are starting to believe that we are near the bottom in terms of pricing or possibly sales activity. I mean, we were hovering around close to 20-year, or in some areas, it was more than 20-year lows in sales activities. And with bond rates coming down, we're seeing some fixed rates being relieved. We're seeing some fixed rates starting with a 4 again on the insured side, and variable rates anticipated next year to drop as the Bank of Canada is anticipated to drop rates next year as well. That's steaming up a little bit of confidence in the market, although things are still obviously much slower than they were before. You can still get away with conditional offers on the MLS. That being said, on my side of things, I'm starting to look at deals again and seeing if I can get one possibly under contract before the end of the year, just to hedge my bets in case the market does rip up and recover again in the springtime. I personally didn't believe that it would recover so quickly. I was wrong this year, where it did sort of rip up around the April-May period. Not sure if it's going to happen next year, but traditionally speaking, December and November is when you can find the most deals, as usually there's the least amount of activities, least amount of buyers out in the market. So, I mean, worst comes to worst. Even if the market doesn't necessarily recover significantly next year, I'm still looking for a good deal in itself. And I think now would be a good time to do so. What else has been going on? Bank of Canada has held rates. I made a story on that on my personal page, so I won't go too deep into it. A lot of the same rhetoric as they've always said before, although they are less hawkish, which is obviously a good sign. Again, bond yields coming down. Sorry, I already said that. I'm trying to think what else I've been doing. Oh, yes. On the tenant side of things, I've had a tenant that had stopped paying rent for a while. I think they're $4,800 behind in rent. Got them to sign the N11 and got them out. We have our hearing on April 3rd, I believe, of next year. So hopefully we can recover some of those funds. But as you know, it's very difficult to get that money back once the tenant leaves. Even if you have a judgment and they don't show up and you don't have the new address or you can't find them, you're going to likely have to hire a private investigator. For more details on that, you should listen to the Andrew podcast that we had a while ago. We talked all about that. I don't know if it's going to be worth spending all that extra money and time for only a possibility to get that stuff back, because that person was also unemployed as well. They lost their job. So I don't know if they're going to get a new job and be able to pay that money back, or they're definitely going to have less incentive to do so. Also, I've been going through the mortgage process, as I've been keeping you guys updated with, looking to become a mortgage agent, hopefully be licensed by either the end of December or next year. So reach out to me if there's anything I can help you with. And I think that's about it. There's probably some other small things, but again, just having Maya to bounce off of makes this conversation go much more smoother than awkwardly speaking in a room myself. So we'll jump into the podcast. We have Ping Su with us today, and he is an investor extraordinaire, has multiple businesses. We get into so many amazing topics. He's actually the business partner of Andrew Parashis, who was our last podcast guest. Together, they founded Property Hustlers. He got started in the real estate investing world over a decade ago with student rentals and quickly grew his portfolio and expanded into multiple businesses, the property management, and now he's a real estate broker as well. He recently, over the past year, began his social media presence and has already grown to over 3,000 subscribers on YouTube and has gotten a ton of impressions and clicks on his content on Instagram and TikTok. So they're going all in. Ping doesn't shy away of coaching as well, as he looks to pay for speed, which is an important topic that we get into today. We get into flipping in today's market. We get into how to create a sustainable cash flowing business in today's market, because it's one thing to buy properties and hold on to it. But as we all know, with higher interest rates, with higher expenses, and rents not catching up to those expenses because we're only able to increase by a certain amount every year, our cash flow is going from neutral to negative or positive to neutral in a lot of cases. So it's very important to be able to understand the fundamentals of how to monetize real estate, which is what we get into. This is an episode you guys cannot miss out on. And if you enjoy this podcast so far, make sure to give us a like, share it with a friend, leave a comment. We're trying to get more and more likes onto our podcast. It helps bring great guests out, and it helps keep Madu and I motivated to pump out as much great content as possible. Anyways, without further ado, we'll jump right onto it. Just a heads up before we get started, this podcast is all about providing you information, not financial or legal advice. So if you need the real deal for your situation, hit up a professional. We can't promise you our information is always up to date or accurate, and we're not responsible for any investment decisions you make based on it. Markets change, information change, you know the drill. Anyways, thank you for hanging out with us responsibly. Let's jump right on in. Hello, everyone. We are joined with our very special guest, Ping Su. Ping, how's everything going?
Great. How are you?
Doing good, Ping. Doing good. Wow. Sorry, that's not that. How's it going? And for anyone that doesn't know you, Ping, why don't you give everyone kind of a quick background on yourself and kind of how you got into this investment journey? I've been following you on social for, I want to say, a couple months now, but still learning a lot about you myself. So
honestly, like we just started really pushing out social media about a year ago. We were never really big fan of pushing out content. Never wanted to be a YouTuber or content creator in real estate space, especially because we're a little shy. Me and Andrew, we never felt the need to actually do that until about a couple of years ago. We're like, you know what, we really feel like we're missing out a lot of good opportunity because our online exposure is just not enough, right? Our network is not big enough outside of our active business in property management, real estate, and even investment side. So we decided to start really commit our time and effort into learning this space, right? Social media space, and try to like put out as much content as possible. So that's kind of like what we're currently focusing on in terms of I shouldn't say focusing on, like we really committed about 1 to 2 days per week to really try to like push this out and try to improve over time. And as an investor, we're already seeing some pretty decent results. I actually started investing in real estate back in 2010 with my mom's guidance going into real estate. So I got accepted into engineering program at McMaster University. First, even before the semester started, my mom actually sat me down, wrote 20 on my notebook. And then she said to me, you have 2 jobs to complete in the next 4 to 5 years. Number 1 is your engineering degree. Number 2 is you need to have 20 tenants paying you rent by the time you graduate. And the reason why she set up that goal was because we kind of grew up. I grew up with my mom trying to figure out how to invest in real estate back in Taiwan. And that kind of created an option for us to kind of travel. Sorry, not travel is one thing, and also immigrate to Canada, right? So she wanted to kind of set up the foundation and then really teach me how to do this throughout my university journey. So that's kind of how I got in. First property, we got every property that we got was a value add approach, right? 4 bedroom. And then we have to do a bit of a value add renovation to the basement, adding additional units, 2 rooms. So first year I got 6 rooms, second year 7, third year 8, and then the fourth year was 7 again. So in total it was at 27 rooms by the time I finished school. So that's kind of how everything started. And then 2015, I'm like, you know what? I kind of know enough about the real estate market, especially in student rental area near McMaster University. I was looking around and came across with my current business partner, Andrew. He was already in multifamily space, triplex, and then there was one conversion that he was doing aplex in Bayfront area. And that's when we're like, you know what? I really don't want to stay in engineering for too long, right? And then he had the same mentality. He was working with a family for the construction business. And that's when we met and we're like, okay, how do we actually get out of this, right? Because our opportunity cost is actually pretty high. As an engineer, I do have a pretty decent salary that I'm drawing. And then for him, he's got an active business that he's running as well. So right there, the very first thought was, listen, we need to like figure out how to grow our portfolio. using the active approach so that we can also replace our income. And that's actually one of the things I wanted to sort of touch on is how to monetize in real estate, because I feel like a lot of people neglect the part of a monetization. We always talk about investing, BRRRR method, we try to grow our portfolio, and then we end up being super cash poor along this journey.
Interesting. I was just going to take it back to how you first got started, because I think there is an important part of your backstory there. How were you buying in undergrad? Because 2010 to 2014, that's around the same time I was at Laurier, you were at Mac. I know Laurier Waterloo prices, and I'm assuming it's about the same in Mac, probably about 3 to 4, maybe max 500 a house. But most of the stuff you'd probably buy around 3 to 400K. You still need an income. You still need a down payment. Like what was that journey? Because scaling 4 properties at that time was still, something big, right?
Great question. Fully supported by the family. Leverage the family's credit, because the whole purpose of getting myself into real estate was really solely for educational purposes. What my mom told me is that she's going to support me with the funds, but she wanted me to actually find deals. Number one, it has to be value add. She didn't actually restrict it on me on or off market deal, but the very first one was actually off market deal, and then the price was $272K. At the time, we were able to do the refi and then actually brought some capital into Canada and then use that to have leveraged my parents' credit to, new immigrant benefits to kind of qualify for this first 65% of mortgage. So we use that, and then second year we're kind of offloading a little bit our portfolio in Taiwan, just because our focus is basically shifting into Canadian life, and that's why we're having a bit of money to play around with.
Gotcha. Okay. The little bit of the family was helping you out along the way, and you still scaled it to 27 units at that time, right? And so I'm just curious, what are the challenges at that point? Because, I wanted to buy back when I was in university. For the most part, I got lazy, to be honest, right? Like my parents were like, hey, rather than spending all this money on rent, we can buy a place and so on. And I was like, I don't want to have my friends as my tenants, right? What are your thoughts right now on the student rental market in McMaster? Do you think it's still viable to do what you did back in 2010 to 2014? Do you think someone else could do that today?
Definitely a little challenging. I'll be honest with you guys, right? And with all the audience, right? The main thing that I find that a lot of new investors, their mistake is that they're trying to copy other people's journey. Other people's journey is simply not suitable for you, because real estate cycle was different, price was different, mortgage term, everything was different, right? At that time, my biggest issue was not real estate, right? I got full support, not just a little bit, full support from my family. And then even for the renovation, I came in here to help facilitate the renovation, finding the deals, right? And then placing the tenants. My biggest challenge was actually the communication, right? Because English was never I wasn't fluent in English at all. So that to me was the biggest obstacle, right? It was not real estate, it was not funding, it was nothing like that, because I already had my mom guiding me through this journey. So it really wasn't a lot of thinking to do. Okay, but to answer your question, not a lot of people can probably duplicate that process, because unless you're getting yourself into a market where it's only, the student rental price is about 300K or less, then you can maybe try to copy my story over there. But also, I got a pretty decent appreciation over time from 2010 all the way to 2015, right? That's where we're able to draw some equity out, right? It's not a full BRRRR or anything, because the market appreciation was only at 3 to 5%. It's still pretty flat at the time, but at least the appreciation is there, right? And in today's market, I think with that kind of student rental, you have to look at the city growth, the university plan, right? All that stuff. You have to take all of that into consideration.
Yeah. Now I would say it's even difficult to pinpoint what markets are going to grow more scalably, right? Because when you look at what's happening in Canadian real estate now, or not now, like prior, all the markets are ripping, right? Some of it based on fundamentals, other based on solely investor demand. We had this conversation with Andrew, and now with things leveling off, interest rates being high, you're seeing those investor fueled markets drop pretty drastically. And some of those markets that had more fundamentals, like Hamilton, Toronto, so on and so forth, yes, they experienced a slight decline, but not nearly the extent of some of the other tertiary markets. So I almost feel like functioning in sort of a flat market is almost easier, because you do have to rely on forced appreciation. There's not other sort of appreciation that you can rely on in the short term.
I was just going to say one thing there, which is I really like how you said, like a lot of investors do try to follow everyone else's journey. instead of just identifying the opportunities that are existing in today's market and kind of carving their own path out there, right? So really like how you said that as well, and just reiterate that as well. But yeah, go ahead, Austin.
Yeah, so I wanted to jump into something that you mentioned a little bit earlier. While every investor has their own journey, we're all going to face pretty similar hurdles. And one of those hurdles you mentioned earlier is running out of money. I don't care who funds your money, their money's going to run out eventually, right? And you're going to have to figure another way to scale. If you quit your job, which a lot of investors, it seems to be like a recent trend, you have to find some way to replace income. So you mentioned monetizing real estate. What does that exactly mean? And how did you go about doing it yourself?
Right. So here's the thing. One of the things I actually learned from 2010 to 2015, and again, this is all being in a very fortunate position where someone can actually guide me through this whole journey. My mom had a cash problem back then as I was growing up, right? How my dad compensated was through stock options and all that stuff. How my mom compensated was through business. So she always knew that it is really important to grow your investment portfolio, but also at the same time, grow your business income or your current income. That is really crucial to me. And from 2010 to 2015, I don't get any cash flow because it's fully supported by the parents, right? I do all the legwork and everything, right? I don't get anything. But what she told me is you have to build in your service fee in any joint venture that you're doing, right? In real estate field. And so from there, I knew right away, whatever I'm doing with other people, I need to figure out a scalable business model where I can draw in active business income for my business, for my personal income, because that pays for the bill. Right? A lot of people right now talk about 50-50 profit sharing. They don't get paid until almost the second refi or sell of the project. And that worked in the past maybe 3 to 4 years, but it's no longer working with the interest rate, with the real estate cycle that we're going through right now. Right? So we have to be very smart and careful with the business model that we implement for ourselves and for our joint venture partners. So kind of back to what you were saying, monetization all started with how can we actually draw the income in, right? At 2015, 2016, when Andrew and I started looking around at different opportunities, we had a couple of issues. Number one is that we were doing flips. We also acquired other projects in St. Catharines, and then eventually we ran out of the investor list, right? Investors on our list, right? Mm-hmm. So we realized that, okay, our context is just not big enough. And that's number one. And number two, in order for us to really stay focused on real estate investing journey, we have to start offloading some of the operational work to local property managers. And we had trouble finding that person. We interviewed a bunch and then I just didn't feel like it was a good fit. And then we're like, why don't we just create a property management business, monetize this service through our circle, right? There's a lot of landlords near McMaster University. There's not a lot of great property manager. Why don't we do that running as a business and use that to scale up our contacts, our investor list as well? Because here's the thing, who are you going to trust more? People who are on the internet talking about like the real estate market or giving out information, or someone that you're already working with on a daily basis. And that's why we're like, okay, why don't we just start with the property management business? And being in almost the first property management company around McMaster University, we quickly, I think the first couple months, we were able to actually acquire 12 clients. And then that was equivalent to about like 26,000, right? So income came in almost immediately. And then we started managing property. We hired the admin, we hired the maintenance technician. And then we just started like try to like put this system in place so that now the business is drawing income from other landlords. And then another thing that we noticed is that we're able to do a cost down for all of our own properties as well, right? So that's kind of one way to monetize. And what we did was do property management initially. And then very soon after that is that I noticed that I think we grew up to close to like 40 clients. And what I did one day is I kind of sat there, we're like, okay, we're growing because some clients are buying, some clients are selling, right? And then I just literally took the total number of transactions that they did and divide by the total number of clients that we had. And roughly, I remember the number was about 20 transactions and I divided by 40. I'm like, okay, it doesn't matter what the investor, what the landlords are doing with a long-term or short-term strategy. If I just take the average numbers, every investor is going to transact one property every other year. That's the conclusion I got. I'm like, listen, like that's 20 deals. 20 deals times like even just 10K, that's additional 200K that we're leaving on the table. So right there, we're like, okay, we need to actually get a license, figure out how to monetize or integrate that service into our property management service. And then once we did that, and then the next thing we know is that we notice that some people are now willing to expand or restructure, or they are simply not in the position to actually do that, but they can do refi. So we're like, okay, why don't we launch a flipping business? Because when we do that, we can raise capital from our investor clients, right? People who don't have the means or capacity to buy another project, but they get to join into our project just by refi 50 to 100, 150K. They can just dump into our project. And then on the sale of the project, we also take that commission as a listing agent, right? So these are kind of a few examples on how we monetize throughout the journey. In the meantime, we're obviously still investing. That's all kind of, we kind of keep it very consistent.
I've got a question. Where does the entire social media and podcast and all that kind of stuff fit in? Because myself and Austin, this is now just general curiosity, and hopefully our audience finds it valuable. We view the podcast, we view Rise as kind of loss leaders for our own businesses, our own partnerships and stuff like that. If you guys are dedicating 2 days a week towards your social media and online presence, like, is the plan for that to be a standalone, monetized, revenue creating kind of business, right? Where does that kind of fit in here as well? Because we've also seen more and more real estate investors come into the online space, come into podcasting and so on, right?
Yep. Two main reasons, actually. Number one, so to answer your question, eventually it will become probably the biggest monetization funnel that we have. We already have the vision for the next, obviously short term and sort of like medium term goal for the channel, which I can talk about that in a little bit. But shorter term is, we came to the realization is that if your top of funnel is not big enough, your sales is not going to be big enough anyway, right? Top of funnel meaning like people need to know what you're doing, what we're doing, what kind of service we're providing, what kind of investors we are. If people don't actually know what we're doing, it really affects the sales process at the end, right? So that's kind of the triggering point, because we're like, looking back to 2015, if you were just try to document every little things that we're doing, pivotal moment, mistakes that we're doing, some real estate project that went south, right? Joint ventures and all that stuff. If we just document the whole process, including some wins along the way, I'm pretty sure we're able to draw one more deal or one more investors every single year. And if I kind of quantify that into a profit, and I was throwing a conservative number, 50K per project, 50K times 8 years, 2015 all the way to 2023, that's 50K times 8, right? That's 400K that we left on the table in profit. And I know that we can do more. And so that's why we're like, okay, why don't we start experimenting social media a little bit? It's a new muscle that we need to build in, but I feel like me and Andrew, we sat down, we're like, okay, we're not feeling comfortable with this, but why don't we try to build a muscle and stack up that skill set on top of everything else that we have built so far?
Makes sense. So it's almost like it's sort of how we look at it. It's like a lead acquisition funnel. It's marketing essentially, right?
Yeah.
Interesting.
And also, sorry, one more thing. Talent. We noticed that we started recruiting a lot more talents through our coaching companies as well in the community. We noticed that when people came to us, it's a lot better when we're trying to find other people or recruit other people somewhere else.
Yeah, the quality of your leads is a lot better. Yeah. I'm curious then, between the investing and the active businesses, how are you ensuring that both are growing at the same time? And I'll tell you why I'm asking this. I usually teeter totter, right? Like where like the mortgage business is, if it's going like really good, I'm really busy, I'm probably not buying any real estate, right? And then if the mortgage business slows down, then I'm deal hunting, right? But how do you guys go about it? Is it just ultimately like growing your teams and hiring people, which the downside of which is there's a cost, right? There's obviously a cost associated with it. Like it's easy to say, just hire people, right? But yeah, so I'm just curious like how you guys went about that.
Great question. So it's all about creating synergy. So for example, flipping business, the reason why we launched that was because we also have a sales team that we're running. Like we have a license that we want to utilize as well. Quickest way is to raise capital, acquire a project, fix it up, which kind of is the revenue for the property management business, right? We're leveraging our technician, we're leveraging our own like power team to actually handle, keep the cost low for the renovation project. And then once we get it done, I or another team member will list it for sale, right? So we're kind of monetizing in between. So it kind of doesn't make sense for us to slow down with the investment side. Okay, and similarly with multifamily properties, the very first property that we tapped into in multifamily space was 2017. I remember at the time it was still 91K per door. It was very nice. The reason why we got that was because it helped us grow the property management business. So we're always looking for that kind of synergy to basically create that synergy between the business and the investment. As we're going over that, we do have one mentality where we don't want to hold on for a property for too long. 3 to 5 years is the maximum that we want to hold on to. With flip project, we obviously want to try to keep it less than a year.
What's the mentality around that, the 3 to 5 years holding on to a property?
Great question. So initially, I also didn't have that kind of concept, right? Because with my mom, all the properties under our personal names, we never had any intention to sell, right? Refi and all that stuff. If it's a bad asset, then yeah, maybe. But one thing that came to my mind was as I was having a conversation with my parents, and then they actually pointed out, they say people's circumstances change all the time. They will have a different priority the moment that they have kids. That they will have the different priority. Let's say if they have a medical situation like within the families and all that stuff. So you want to have the stopping point for everybody, even though that asset might be performing extremely well, right? You want to create an exit strategy. Unless everybody agree to kind of hold on for one more year, you have to sell, right? One person says, hey, listen, I just don't want to continue with one more year because of whatever happened, right? Or I want to simply just go travel, or there's a retirement plan. You want to be able to exit your partner within the timeline that you agreed. Right. This is so that you can avoid a lot of aggravation. And I kind of adapt into that mentality in 2017 because a lot of things that me and Andrew do, we don't have a clear timeline with when we're going to end it. Right. And now we do. We're having the annual meeting to kind of discuss about the directions and all that stuff. But with any other joint venture where people kind of come in passively, guess what? Some people don't want to be in there for 10 years or 8 years. No. Right, it's extremely difficult to pitch that kind of time frame to the investors anyway.
Interesting. Okay, so you sort of have in the contract you draw up 3 to 5 years, and you are open to have that discussion, right? So hypothetically, right now, if your JV is expiring, probably now is not a great time to sell. So you can negotiate a year or 2 year extension. But I think that makes a lot of sense, right? Like even with myself and my joint venture partners, there's time to time where people make their own life decisions. What if they want to buy another primary residence, but they're holding the mortgage on this property, right? Sooner or later, they're going to need to sell this property. And hopefully it's not in a less than ideal circumstance where everyone takes a haircut. So it's something that I've been considering as well. People don't really talk about it. You learn it as you go through it. It's like, oh shit, yes, like there are these different things to consider in other people's lives. But that was a really good point that you brought up there. Now, sort of want to ask how you manage all of these businesses, because I'm sure you can attest to this, myself as well. Like even managing one or two is stressful in itself. And yes, hiring the right people is obviously important. But as you know, when you hire people, it's almost like you're a human resources director now. It's just not, I find it's not just hire and go. You still got to train them, have the one-on-one meetings, so on and so forth. So yeah, walk me through how you're managing these multiple businesses.
Yeah, so there's two ways to kind of look at it. It depends on your management style and how you structure your organization chart. Okay, and the reason why I say that is because initially we were always like finding ourselves being so busy and involved in the operation all the time, right? And one of the advices that was given to us was that, hey, just hire a VA. But yeah, sure, VA also requires a lot of management, right? So what I learned throughout the year is that in order for us to be operating a stable business or be able to accelerate quicker, one thing that we always need to do is we need to be constantly be replacing ourselves if we're doing the bottom-up type of management. Meaning, if we're coming in here to operate this business, we need to find ways to keep replacing our daily tasks, right? So that we can focus on something a little bit more important. Okay, so for example, real estate business, right? If you don't hire an assistant, you're essentially an assistant, right? That's kind of like the mentality that someone needs to be in the back end handling all the paperwork for you so that you can focus your energy on having conversation, lead gen, nurturing the clients, right? Property management is different, right? Investment is same thing, right? We always need to be building that kind of connection. So whatever we feel like is not the top of our priority, we hand it up to our staff, right? So that's bottom up type of management. With social media, what we're doing here right now is that we use top-down management. We actually have an integrator, a production manager to help us deliver and try to like come up with the ideas and try to fulfill the back end. Both me and Andrew, our main responsibility is to come in here, talk about what we've done in the past week, or there's a certain topic that we need to talk about, or for example, podcasts, right? We just need to show up, focus on that, and then and maybe look into the metrics with our production manager, right? And look at the ad and see where it can be improved. And our metrics is very simple. We just need to look at how many views, how many views we get this past 28 days on YouTube channel or on Instagram, Facebook, or whatever, all the other platforms. That's all we care about. And if the number is not, I guess, achieved according to our projection, why is that? Right? And then we push everything down to production manager, and production manager figure out exactly what we need to do. Right? So he ended up hiring some other VA, some editors. We just need to approve the budget.
Gotcha. Interesting. And obviously you're able to do this because you have a cash flowing business. That's another thing, right? Like, don't start going on a hiring spree until you know that you have the revenue to be able to support these individuals.
Exactly. The mentality shifted a lot because initially we always want to kind of get into making money first before we spend, right? That's like when anybody started, right? You want to figure out how to generate revenue and then you spend the money. A lot of people try to register for corporation, right? Putting up their websites and all that stuff. Honestly, none of that matters. You need sales, right? So starting from the very beginning, if you're an investor trying to like close a joint venture partner, guess what? That's all it matters. Your landing page is not that important. You need to be building out that one-on-one personal relationship as much as you can. And then when you bring on someone into the deal, you need to make sure that you're monetizing from the very beginning. Your acquisition fee, your maybe commission, if you're a realtor, make sure that you make a bit of money so that you can stack up your project and really free up your time from the 9-to-5 job.
That's right. So I'm curious on the investing business. I have a second question after this. I'll go to that after. But who did you hire first, purely for investing, managing multifamily properties, managing JV partners? Did you hire like an assistant, and was that assistant a VA, or did you hire someone here? Because there's obvious gaps, right? Like if you hire someone here, it's easier conceptually to understand deal hunt, paperwork, stuff like that. But
yep. Let me take a step back on our organization chart, because I feel like this can be very beneficial for the audience. So number one is when we're building the business, we build business one at a time. We didn't build it all together at once, right? So property management business was set up first. We have the operation manager and admin manager, administration manager locally to handle a lot of operation. And then we obviously have vendors, and even we in-house the technician and maintenance technicians here. Okay, so that's one part. And then going into the real estate, we have a local admin to help us with all the paperwork. And then I have a buyer's agent, listing agents, and all that. Now, moving into the investment, I already kind of have a lot of infrastructure in these two operations. If I want to buy, acquire, I already have someone who can help me do that. So it's just adding additional tasks to them. Once the property gets onboarded, they upload all the information into BuildDM, right? I'm not the one who's actually documenting, but I just hand over the documents, right? It got to the point where I feel like even the acquisition process is a little too much. It's not like we're a big real estate company. It's just like, I remember 2021, 2020, when things are going fast, and then we have like anywhere between like 10 to 12 projects on the go, right? Sometimes it's renovation, sometimes it's acquisition, right? There's too much coordination. Then I end up hiring a finance coordinator to help me with all those paperwork, so that I'm kind of adding additional layer between the property management and sales team. And that one person help me handle or facilitate every single transaction and even renovation budgeting, right? So that's how I stack the team.
That's a very much needed role, I'm sure, in myself and Austin's life, right? You have active businesses that you're pulling money from here and there to supplement your real estate investing, and refinance checks coming in and out. And then it comes to tax year end time, and you're trying to reconcile all this, and you're like, what the heck is going on here, right? So definitely very, I think, applicable to a lot of people. Comes with scale, comes with, you probably need an active business first, like Austin said as well, right? Like if you just have like 5 or 10 properties, you should be able to self-manage that, right? I think I did, at least for quite some time. And then we got some assistance on the mortgage business and stuff like that, and people to help out in bookkeeping and so on. But before we go into any further, so I'm curious right now in the current market, the current environment that we're in, is your focus on investing or the active business?
Great question. Love it. Monetization is still our number one thing, because we always want to keep our cash reserve high. 2022, we bought 7 projects still. And those 7 projects, actually 8 projects, one, we actually backed out. 7 of them we sold 2. One, we took a pretty big loss. There's another one that we're planning to take a loss. So obviously there's an issue with the civilization with the portfolio. And we came in with the right expectation, because we know that when we flip and when we do acquisition, it's going to be by good. There's going to be a bad one where cycle shifted, right? So we're in that stage. And then we know that if we just keep it consistent, cost per average is what is for stock, right? If we just do that with a real estate project, we're still going to be okay, right? But we're kind of in the process of needing to stabilize a few different projects, and we're kind of working towards the end of that. Andrew, Skyler, they're working extremely hard, obviously trying to like keep the budget tight and all that stuff. But my position here is we have to do one of the two things, and I feel like this can be very relevant to the audience as well. Number one is, again, figure out your expense, right? Where are you bleeding the money, right? And do you need to actually change the business approach to your investment property and the business that you're doing? So right there, we have 14 full-time staff. We had to really reassess our staffing and even like how effective they are. We had to bring it down to 8 people, right? Brought it down to 8 people, right? So that's kind of what we did early, actually mid 2022. Okay. And then going into 2023, we're a lot more linear, and then we're stabilizing the properties, right? In 2023, we focus a little bit more on the social media. There's a additional budget that we put into was the production to increase awareness. And that awareness actually gave us even way more opportunities to kind of turn around the situation quicker, because now more people want to work with, more people want to invest with us. All of a sudden, we're able to have a little bit more options. Okay, so that's kind of what we're doing. Control the expense, look at where we can optimize in our business, in our rental properties, and then we're finding different ways to monetize, increase the revenue so that we can always keep our cash reserve to where we want to be, basically.
Yeah, appreciate the transparency there. And I think a lot of people are doing something similar. I know for myself and my business, that's one thing that we had to shift because I do wholesaling, right? So revenue dried up. We had a lot of people, I think we changed almost all our staff to fixed income. That's hard, right? Especially when your revenue dips and your expense line remains the same. So we had to make adjustments accordingly. I think the way that you've explained it makes a lot of sense, but it's hard for people in that situation to think clearly, right? Logically, it makes sense, but when you're in the thick of it, it's like, what do I do? What do I do? And then you almost have to take a 10-foot step back. That being said, so you mentioned that you have 8 people on your team. Before you had a little bit more. I'm curious, are all your staff full-time? Because I think a decision that people have trouble with is, look, I need a bookkeeper, or I need, let's say, the finance coordinator that you have. They might do 15 hours of work, maybe 20 hours between me and Mayu. It's like, you can't hire them full-time per se. If someone's looking for a full-time job. So is every person you're hiring full-time? And if not, oh yeah, they are.
Yeah,
okay.
No, we're back to 12 right now. Full-time employees, they're all on salary. Actually, one person is a VA, but he's full-time. He's actually, he used to work here in Canada for, I think, the past like 12 years, and now he's in Mexico. But anyway, 12 people full-time, and obviously on top of that, we still have our vendors, right, to facilitate the amount of workload that we had to do to fulfill the backing of the property management and even the sales.
Now, how do you know they're going to be working 40 hours a week? Like, I'm sure when it gets to like 20 hours, you're like, we should hire someone. But does this task really justify someone to work 40 hours and to pay them that much?
Yeah, for sure. So here's the thing. I'm not really, I'm more like a result driven. So even my real estate admin, my KPI or even like KPA which is why I call key performance action. It's really important to me. I actually don't really care about how many hours they put in, as long as they can fulfill their set of responsibility. And the truth is, the moment that one set of responsibility drops, right, we create a team culture where people want to take a lot of initiative, right? So we have a lot of bonus building into our evaluation system. So the moment that they can do more, they earn more. We have no problem sharing the profit. And that's essentially the mindset that we had to kind of go back into our team when we had to like kind of trim it down. We say, hey, listen, the workload is going to be a lot more, right? Because now we have way less people that we can facilitate. We don't mind outsourcing some of the work to the third-party vendors, leave those margin to them. But let's cut out the overhead costs. We remove our inventory completely for our property management business. We used to have one room of the supplies where people can just technician comes in here, grab the stuff, right? We bought everything sort of like wholesale price. We just remove everything so that we can reduce one full-time staff basically to manage that. So to answer your question, it's we already knew that the workload is going to be high. Also based on what they filled out with their timesheet, we already know that it's 40, 50 hours. In some cases, it could be even higher, right? So everybody makes a little bit more money. It's a little tougher. And then obviously when the financial situation, real estate cycle changes, we'll readjust that again.
Last thing on my end, and I'll swing it back to Mayu, and this is in still regards to the employment part. So there's like one thing I've realized in real estate, pretty much anything business. There's expectations and reality. The expectations when you hire people is like, okay, I can go kick back at a beach. Like they'll be able to handle everything. Not much is going to come up to me. That, for example, like property management expectation, you hire property management. Maya and I know in the cities that we invest in, a lot of problems still shift back up to us and we have to ultimately make the decision. So it still requires brain power, even though you hired out. This part in your business, 12 people, multiple businesses on the go. What are things that you're still operating in? Just like to be realistic, right? That's like, oh, these things are still coming up to me, regardless of how big your team is, so on and so forth. Like I'm still facing these day-to-day issues. Could you sort of walk us through that?
Yeah, property management business. And by the way, I'll give you a tip on that because I think I know where you're going with this. So property management business, I only do 1 to 2 hours a week evaluating the vendor P&L with my finance manager. If there's anything that pops out for whatever reason, like for example, we're having some loss with the vendor's bill, right? For example, it really shouldn't be negative if we're just building out and then charge back to either the landlords or our own properties. It really shouldn't be negative. If it pops out, I want to know why, right? So that's essentially why I spend most of my time for property management, which is only 2 hours a week. It's completely okay. Pretty disconnected from the operation. Sales business, sometimes it requires me to kind of step in to do some sales training. Because again, like dealing with the investors or even like buyers, sellers, right? There's sometimes like honestly, every single transaction is slightly different, right? There's an emotional level. There's also the contract things that maybe we need to pay attention to. So I step into that business a little bit more. I want to say like probably on average, it could be up to, I want to say 1 day a week. So that already kind of takes up to, 1.5 days. 2 days are going to be in media, production manager. But also on top of that, right now we have more students joining into our program. And I'm really focusing on the fulfillment of every single investor that joined our program because I don't know what you guys do, but I think a lot of people only do group coaching. And I noticed that the only way that I can accelerate or really elevate other people is to one-on-one coaching. Basically like this, right? We're having conversation. I can really go into a lot deeper with how I operate certain problems, how I overcome certain problems, right? Where to avoid, how to choose the market, and all that stuff, right? It really provide a customer support. I want to continue to do that, even going into 2024, until I really don't have the time to fulfill this part.
Okay. Yeah, 100%. No, I'd agree with that. I think myself and Austin have both been part of multiple programs in the past and definitely get the most value out of being one-on-one and asking whatever kind of dumb questions pop up into our head like we are today, right? So big part of the podcast as well. If you want to pick people's brain, just get them on a podcast, right? It's a great opportunity. So I want to kind of jump into, because I think it's a really good conversation. It's a really good example to all of our listeners. The one thing I do find is that a lot of people that have retired off real estate, for the most part, have owned their properties for like 10 years, right? And so as a result of minimum wage going up, average rents going up, you now have true cash flow. Properties that we've purchased in the last 2-3 years are maybe breaking even, maybe cash flowing today, but for the most part, it's negligible amounts of cash flow, right? So the entire focus on active businesses is that puts money in your pocket today, allowing you to leave your day job if you want to. Also, nothing wrong with staying in your day job if you've got a good income and if you like what you do. Like my wife loves what she does and she would never essentially leave, right? So everyone's different. I think everyone's journey is different as well. So you guys obviously have a couple businesses. You've got good staff. I think that was a really good question by Austin as well, just understanding what it is that you spend your time on today, because you will always still be working unless you truly master the 4-hour work week. But you've also now pivoted to the US. I do want to quickly talk about the US market, what you're doing there. I think for the most part, everyone knows what leads people to the US, but I'd love to hear from your perspective as well, just kind of what led you guys there.
Here's the thing, US market has always been in our mind, even since like 2020, 2021, right? We're like, okay, the real estate market over there is low, right? Compared to the real estate market in Ontario specifically. And we always knew that that's something that we want to get in. But when the business is moving pretty fast and we're in the growth mode, it's a little hard to actually diversify even our portfolio or even the mental energy into a different market, because now you have to relearn and there's just not a lot of synergy. So what we did is where we really came to the realization that we had to tap into that was actually, again, 2022. When we're seeing everything that's happening here in Ontario, the rules is going to be against the Airbnb, the short-term rental, right? The cottage, right? If you see all the trend in the past few years, the investor had to pivot so much We went from single family student rental all the way to duplex conversion, all the way to garden suite and multifamily. And then COVID happened. All of a sudden, everybody's like talking about cottage, right? And now we're kind of shifting back to, okay, I don't know where to invest. Maybe we need to start looking to private lending. Maybe we need to go to New Brunswick and Alberta. So if you look into the whole trend of the investors moving in the past few years, I've never seen any market where the investors need to shift that quickly. Okay, straight up. And the truth is, a lot of the strategy that's been promoted doesn't make any financial sense. Garden suite, I would never do it. This is just my statement, right? Because the amount of money that I can put into that one garage and turn that into 1 or 2 bedroom, most likely it's not going to be 2 bedroom. It's bachelor or 1 bedroom apartment. I can buy a house using that kind of capital.
Yeah.
Right.
Yeah.
So I would never touch.
We've had those conversations as well here. Yeah.
Yeah. So, and I see some people promoting it because that's their service, and there's no problem with it, right? Because you want to, if you look at the ROI, if you never want to actually buy elsewhere, then okay, the number might make sense, right? But for me, I want to look for the right opportunity. So the moment that I'm thinking about the US is because when I'm thinking about Alberta market, New Brunswick market, or even some market all the way up north, I might as well just drive down 4 to 5 hours into Ohio market. If you look at Ohio market, the population is close to 2 million. If you put that state into Canada, that's the second largest state or province in Canada. It's only 4 to 5 hours away. So how come we're not considering that? And it's really because we're not familiar with the market and we're worrying about the mortgage qualification. So a lot of things combine. I can go on this topic forever, but the way that I'm structuring what we're going to do in the next 2 to 3 years is hey, listen, right now, Ontario investors really cannot neglect this market, this opportunity anymore, right? Because the moment that you go there, everything's $200K. If there's an eviction, you don't have to wait for 8 to 13 months. My previous one is 13 months. You can literally go down there, deal with the problem, or if the tenants are not cooperating or still not paying you rent, guess what? 2 months out, you're not going to be here. Right. So there's just a lot more benefits in here. And now there's a pros and cons. Obviously, grass is always greener on the other side. But this is where we started doing a lot of due diligence in a different market. We started interviewing a lot of real estate professional investors down there, and just to kind of get to know what market we need to be tapping into.
Yeah. So it sounds like Ohio is a state that you guys have kind of picked. That's correct?
Yeah, we looked into so many more, but Ohio right now, I think is the lowest hanging fruit that we can just jump into there. We're also a GP for a couple other big complex, but we didn't find a deal, and then we're not going to be the boots on the ground team. We're just helping them to raise some capital, and then help them promote, right? And that's kind of another way for us to get into the US because we're not there, so it's okay to be completely passive and not try to for that active position.
Yeah, no, we spoke with a couple people at our most recent Rise event that were doing the very exact same thing, right? You help raise capital, bring the projects to people that aren't familiar with the US. You vetted the deal, you kind of done your due diligence on it, right? And it's a way to kind of get your foot in the door as well. So is it Cleveland that you're doing, or is it Cincinnati, or is it, what was the other one? There's a 3 C's in Ohio. Is it Cleveland?
Yeah.
Columbus? Columbus?
Yeah.
Okay, cool. So I'm just curious then. So what are you guys doing from a financing perspective getting into the US? And I'll give you some background. Like I was looking into the US quite extensively last year. I started in the peak of the market because I was like, well, shit in Ontario doesn't make any sense now, right? And so might as well just head down to the US and at least you can sell cash flow. And then the market here turned and I ended up just buying here. But I'm curious, like the main issue that I was looking at and that a lot of people were looking at is, what do you do for financing? Is it just private money? I looked at it as, do your time, get in with some private money, do your 1 or 2 years until you can get out of it, right? Build up a US credit bureau. Is that the reality or is there another?
Yeah. So mortgage wise, you can still go to like RBC and TD, right? They can actually help you qualify for maybe up to 75% of the loan to value. But the truth is, when the property is only 200K USD, which is converts to maybe 250, 270K, we're in a pretty comfortable position where we can acquire a couple projects, right? And just test out the water without any mortgage. So that's one thing that we can consider doing. But ideally, I would still want to leverage the mortgage a little bit. Now, whether or not we can put it into a LP is a completely different story because I think the very first project, they always want to have the personal guarantee in there. So I'm on board with everything you just said. We probably need to do our time. right? Just get in, right? And, suck it up for 2 years and then, but it's going to open up a lot more doors moving forward.
And are you ever worried about currency? Because this is, I don't know, not too much.
I never worry about that because when you're looking at the business move, right? I don't want the little things to prevent me from pulling the trigger. For example, social media and even coaching is the worst time ever to do this in 2023, right? Because here's the thing, the interest is no longer going to be investment anymore, right? But why do we do this? Because the attention is still low, right? And competitors are getting out of the market. So from a business point of view, business planning point of view, I wanted to kind of get in when everybody's getting out, right? And then because I'm playing a 3 to 5 year vision, 3 to 5 year term for my business. So if getting into the US and I'm worrying about taxation, I'm worrying about the currency exchange, I'm worrying about this and that, right? I'm never going to pull a trigger because there's no perfect timing for me to do that. By the time this all get figured out, right, you're probably losing a huge appreciation in the market.
Yeah. No, I think that was perfect. I think we've covered a lot of topics, and I don't think we ever acknowledged this, but obviously we had your partner on the podcast last week, and his episode was great. Your episode was great in a different way as well. So really glad to have you on. Normally at this point in the podcast, we like to ask our guests 2 questions. First one you briefly already touched on, but where do you see your business going in the next 2 to 3 years? Main focuses, growth, stuff like that.
Okay, so obviously that's a broad question, but for the investment side, I'm going to break it into 2 different parts. For the investment side, buying and holding is not something that we're interested in doing more in Ontario. I think we built a decent amount of portfolio in the past decade, and then we really enjoyed, had the fortunate enough to enjoy that kind of appreciation, market appreciation for Ontario market. I think we're going to have not going to sell everything, but we're going to offload some properties so that our cash reserve is even higher, so that we can pull the trigger in the US market a little bit more, diversify a little bit, and then from there, based on what business opportunities we come across, we might actually make a different decision. Okay, so that's for investment side. Now, flipping and any active project, we will still do it in Ontario because we already have the infrastructure here, right? If we can generate off-market deals through our property management business, through our regular touch-up local business connections, we're gonna still acquire that. We just don't want the tenants to be involved in that investing equation anymore, right? So something quick, active, we're more than happy to continue to do that in Ontario, but long-term hold 3 to 5 years moving forward is probably going to be allocated more towards the US market. So that's number one. Now, in terms of the business, it's all about finding the synergy for our next step. I think success is really sequential. If you look at a lot of our other successful entrepreneurs, and I'm not saying that we're there yet. I think by having the right mindset will help us better position ourselves in that position to accelerate a little quicker. So we don't want to start anything that's way off. And we also don't want to overscale a business for too much because we did that. There's a lot of mistakes that I can share in property management, business, realty, even investment side, right? We acquire way too many projects at the same time, right? Overscale will always lead to overhead costs, right? And after you have the overhead costs, you just chew up all the margin. So you end up doing a lot of work for almost zero margin, right? At the end. So business-wise, we have targets, but yeah, that's kind of like how we're positioning in the next 2 to 3 years.
No, I like that. You guys are definitely very, very impressive guys. The second question is for a newer investor getting started in today's market. What kind of advice would you share with them today, or cautionary, or whatever you want to share?
Yeah, BRRRR doesn't work anymore. Okay, and that's just a reality. If you want to BRRRR another project, guess what? You're consuming the knowledge that people are putting out 2 years ago, or even not even a year ago, 2 to 3 years ago. So recognize that there's a different strategy in different real estate cycle, and in today's cycle, you have to figure out how to monetize, right? Because if we talk about cash flow being so important in real estate, but nobody talks about cash flow being important in your business, right? Why are we speculate that our pay is going to come from the properties when we don't even know where real estate is going to go, right? You have to protect our own income, our active business income, right? So design your business model accordingly. Make sure that you assess and see if that's a scalable model where you can actually get compensated throughout the project management process. And then from there, if that makes sense, okay, you figured out the monetization way in real estate, and that's where you can further scale up.
Awesome. Yeah, you definitely speak like an engineer. How you approach things are very quantitative, logical, and in a problem-solving manner. I could very much tell that you're an engineer. I'm just curious, do you have a coach by any chance, or are you guys just like creating these ideas yourself and just executing?
Now we always pay for speed because sometimes being cheap or look for cheaper options sometimes gets more expensive to us. So everything I talk about property management, at some point we have the property management coach that's kind of walking us through how to actually build that organization, charting, all that stuff. Realty, we have a different coach, and then even coaching, all that stuff. We always have coaches.
It sounded like it, because it sounds like even your 2-year plan is very well thought out and put together, right? Like everything that you're talking to is like, oh, sounds like you've already kind of done it, even though you're striving towards it. So I guess it makes sense that you're leveraging the experience off of sort of your mentors that you have there. But anyways, Ping, really appreciate you jumping on. This was almost like a coaching call for Mayu and Dai and our listeners. So like it was a really great episode. For those who want to connect with you, learn more about your journey, check out your podcast and other content, how could they best do so?
Well, the main channel is called Property Hustlers. We put out a lot of the contents out there on YouTube, but if anybody wanted to kind of get in touch with me directly, you can do DM on Instagram, ping_real estate, or you can send me an email, ping@eliterealestatenetwork.ca.
Awesome. And for those who enjoyed this episode, make sure to like, subscribe, share with a friend. It helps bring awesome guests like Ping on. And until next time, everyone, invest smarter and live better. Take care, all.